Greetings, members, one and all of the Salivation Nation. Small dips for silver and gold. Let's explore some of the reasons why. Yes, that's right. As you can see here, they're down for gold and silver. And platinum is the only metal that's up that's traded regularly, but rhodium is taking a pretty big jump. But palladium is down as well, down $17. Let's see what's going on here and what's the driver behind this first loss in 4 sessions here from this article from MarketWatch. We can see that the Dow Jones has ended down over 160 points as stocks retreat from records. We saw them go almost essentially almost 30,000 for the Dow Jones Industrial Average. So, yes, indeed. Fascinating indeed. This on the news that Democrats have blocked the Fed nominee Judy Shelton with Vice President-elect Harris's vote, or they're calling her the elect. But let's see kind of what's going on here. Gold futures settled lower on Tuesday, easing back after climbing over the last 3 trading sessions, but failing to reclaim the key $1,900 an ounce mark. That's been a point of resistance for gold here. Prices had posted gains in recent days despite news of progress on a COVID-19 vaccine, which would ordinarily serve as a headwind for the precious metal. In fact, when that announcement was made, we did see gold and silver drop fairly substantially, but it didn't take long before those prices recovered. A softer dollar in recent days has alleviated some of the pressure on gold, but is still struggling to pull itself considerably off its lows, said Craig Erlam, senior market analyst at Oanda. In a market update, the yellow metal found support around $1,850 and $1,860 region, but it has since struggled to break back above $1,900. Perhaps this is a new short-term range that's emerging for gold, but with the vaccine news seemingly improving week by week, it's looking a little shaky below. He added, the recent recovery in prices may be encouraging to some, but unless it breaks $1,900, it won't last. December gold declined $2.70 or 0.1% to settle at $1,885.10 an ounce, a day after eking out a nearly 0.1% gain and its 3rd consecutive advance. Silver futures for December delivery were down negative 0.98%, shed 15 cents, off 0.6% to settle at $24.65 an ounce, following a 0.1% gain on Monday. Gold has been more responsive to news of a resurgence across the globe of the COVID-19 pandemic that has buoyed the commodity for months. And we're seeing cases increase even more so now. The global tally for confirmed cases of the coronavirus that caused the COVID-19 climbed to 55 billion on Tuesday, according to data aggregated by Johns Hopkins University, while the death toll rose above 1.3 million. In the past week, the U.S. has averaged 155,442 cases a day, up 82% from the average 2 weeks ago, and cases are rising in 50 states and territories. There are currently a record of 73,014 COVID-19 patients in U.S. hospitals, according to the COVID Tracking Project, topping the previous record of 69,993 set a day ago. So this is concerning for sure. The spread of the virus has limited the downside move for gold, even as a report of a Monday confirmed successful towards a vaccine to combat the deadly pathogen. The latest news on Monday from Moderna indicated that its 2-shot vaccine candidate so far in late-stage studies has proven to be 94.5% successful. This is in the 3rd phase of testing there with many thousands of people, at cutting the rate of the infection of COVID-19. Jeff Wright, Executive Vice President of Gold Mining, told MarketWatch that he believes the gold market is in for some continued weakness through the end of this week into Thanksgiving next week. And the pause for gold will turn out only after Thanksgiving, when Washington must return to pass a spending bill to fund government past December 11th. Wright said that he doubts that a shutdown happens, but noted that there could be gamesmanship by both political parties before a resolution towards an aid package is received. Mega stimulus is on the horizon, but not until new Congress in January. Gold will benefit from both of these events, and I do agree with that. I am bullish on both gold and silver, in spite of today's little lulls in the metal prices. Meanwhile, Atlanta Federal Reserve President Raphael Bostic, during an interview on CNBC early Tuesday, said that the central bank is monitoring the U.S. economy's progress in the face of the pandemic's reemergence, in case it spread, portends something more deep, but added that the Fed toolkit to combat the market effects of the outbreak still have some juice, a remark that could be bullish for gold. Yeah, and the Fed has got some juice. All right, well, indeed. I tell you what more could they do other than negative interest rates? Well, print more money. In a separate interview on Tuesday, Federal Reserve Chairman Jerome Powell said that the need for fiscal stimulus is perhaps greater than the other time in recent times. There hasn't been a bigger need in it for a long time, Powell said on Tuesday during a discussion conducted remotely via webcast to a separate group in San Francisco. Sanguine investors believe that longer-term weakness in the dollar may also lay the groundwork for higher gold prices eventually, as central banks and governments expend outsized funds to limit the economic damage from the pandemic, which could weigh in the dollar. A weaker dollar is viewed as supportive for gold, which is priced in the currency, making it attractive to commodity buyers using these currencies. The dollar was off 0.2% on Tuesday, at 92.43 as gauged by the ICE US dollar index. Bullion prices didn't see significant moves after a report Tuesday on retail sales activity in the U.S. showed the sales matched consensus forecasts with a rise of 0.3% in October, and sales, including gas and automotive prices, climbed 0.2%. Separately, data on import prices showed a drop of 0.1% last month. U.S. import prices minus fuel advanced 0.1% in October. Separate data showed industrial production rose 1.1% in October. Of course, this is meaning that, this is before these more recent shutdowns. In fact, the state of Washington, they're going to cancel Thanksgiving, and other places are doing pretty strict shutdowns. Some of them don't make sense. I'm not an anti-masker per se, but I think it is quite striking and telling that in spite of more mask wearing in the United States ever before in the history of this country, in fact, more mask wearing in the history of the entire world, that these cases are rising exponentially. So I wonder how effective these masks are. It makes you wonder, makes you curious about that type of thing. It's also frustrating. It's sad. I hate this virus, what it's done to the economy, what it's doing to people, the fact that it is so contagious, and the fact that some people are dying from it. It is a small amount. I don't trust all the numbers that are going out there, but basically this is what the market is reacting to, the quote official numbers, and what's going on. I do believe we ought to take it seriously, but at the same time, with the reaction, what's going on, and one thing we do take seriously is the fact that there are some businesses that have closed down that will never ever come back, and that's going to have a long-term effect on certain things. And as I've mentioned, there are good economic numbers that have been put out there, but there's still a lot of residual side effects from closures and some of these businesses that will never reopen again, at least in the way that they were. This vaccine couldn't come soon enough, even if it's just a psychological element, even if people like me are very kind of concerned about it. I don't know that I'm going to take a vaccine. I think if I was more immunocompromised and much older, I may consider it. But I don't know. But anyways, regardless, the metals are going to react to the news and what's out there in the marketplace with what's going on with the markets in general, the stock market, and what the dollar index is and the like. And so we'll see how it plays out. Nonetheless, we will press on and make no mistake with the Federal Reserve printing money like it's going out of style. And they're going to do that, and they can feel free to do that because they do whatever they can, because a reset is just going to cancel it all out. That's what they're going to do. They're going to basically revalue debt. And so the debt we have now, because there's no way we can pay it back. There's no way our grandchildren will be able to pay it back. And by the way, that's if you're a millennial, your grandchildren won't be able to pay it back. So that's why we hold gold and silver, because they are independent of the system. Be independent. Be your own central bank. Hold gold and silver. A multitude of gratitude to you all for taking the time to watch. And I'll encourage you to please rate, share, comment, and subscribe.